I don't put anything past the government, but no, I don't think that's happening. I don't, but I don't, I can't say it's definitely not. I don't know, but I actually think that I was up there last year with the and trying to help educate some of the
Yeah.
senator and congressman staff about what there's a lot of just um, ignorance. There's a lot of disinformation. There's a lot of confusion. They
Hmm.
don't know the difference between Bitcoin and all the other things. Oh yeah, we know about Bitcoin. We've been looking at the Ethereum one. It's like they just don't get it.
Yeah.
And it's not that they're dumb. They're just there's a lot of misinformation out there.
Bitcoin has always been a battleground. While its believers see it as the future of finance, the old guard views it with suspicion, sometimes outright hostility. The question many are asking now is whether the price is being actively suppressed to keep Bitcoin from realizing its true value. James Lavish doesn't believe outright manipulation is taking place, but he acknowledges that things aren't as transparent as they could be.
We don't truly know until Coinbase releases exactly what all the addresses are and exactly how they're holding them and verifies that. Like we have audits. Yeah, I don't know. Do I expect it? No. Do I believe that there's manipulation going on? No, I don't believe that. I just think I just think that truly, I think, look, $100,000 has been a massive mental level for people.
The resistance at psychological price levels like $100,000 suggests that there are forces at play. Bitcoin has repeatedly broken that threshold only to be pulled back down. Some argue this is simply market dynamics, long-term holders taking profits after years of accumulation. But could there be more to it? Institutions are now involved, and they are taking advantage of the volatility.
Institutions are now in here and taking advantage of this volatility. And once it does get over 100,000, stays over 100,000, and that mental level is gone, that becomes a support level. But we're not there yet, at least not today. So
Wall Street and traditional finance have long dismissed Bitcoin. But when you follow the money, something interesting emerges. Institutions are starting to realize what many retail investors already know. Adding even a small percentage of Bitcoin to a portfolio dramatically improves returns without significantly increasing volatility. And that's a game changer.
if you look back over the period of the last 10 years, and you just look at the classic 60-40 portfolio, and you added any allocation to Bitcoin to it, it enhanced your returns dramatically. It only raised your volatility a little bit.
This reality should be enough to push institutional investors toward Bitcoin. And yet, adoption has been slow. The problem isn't the data, it's the mindset. Traditional finance has been operating the same way for decades, and change is hard.
They're not running the numbers. That's the crazy thing is that, look, I come from that world, and it's very difficult to change your mindset away from something that has worked so well for you for so long.
But what if the slow adoption isn't just about stubbornness? What if there's a more strategic reason? The US government is drowning in debt, and some believe those in power are fully aware that a financial reset is inevitable. If that's the case, it wouldn't be surprising if Bitcoin were being held back, at least until certain players had secured their positions.
Our country is so far in debt, and there have to be people in leadership roles that understand that this ship is going to sink. And so we need some sort of peaceful alternative, but we can't just start buying Bitcoin.
The idea that Bitcoin is being suppressed to allow institutions and governments to accumulate at lower prices isn't far-fetched. We've seen similar tactics before in other markets, especially with gold. Governments and central banks have historically used financial instruments to suppress prices in order to maintain control over economic narratives. Could the same be happening here?
But do you think there could be some, I don't know, I guess greater plan that's in motion, and now when the price is suppressed, they can come scoop it up at a lower valuation or something?
I don't put any.
If suppression is occurring, it won't last forever. At some point, the dam will break and Bitcoin's price will surge. Historically, when supply is tight and demand spikes, Bitcoin experiences rapid price discovery. And with global uncertainty growing, the conditions for such a move are aligning.
Bitcoin is just the ultimate store value. If you want to store your money in something and know that it's there, and if the money supply expands, there will be more dollars chasing it.
Bitcoin price suppression isn't just a theory held by a few individuals. It's a growing concern among industry experts, investors, and analysts who have been watching the market dynamics closely. Robert Kiyosaki, the well-known author of Rich Dad, Poor Dad, recently accused BlackRock, the world's largest asset manager, of deliberately suppressing Bitcoin's price. Kiyosaki speculated that BlackRock's CEO, Larry Fink, may be strategically dumping Bitcoin to drive the price down, allowing institutional investors to accumulate the asset at a discount before its next major surge. This idea gained traction after BlackRock's Bitcoin ETF recorded its largest ever single-day outflow of $188.7 million, fueling speculation that large players were unloading Bitcoin temporarily to control price movements. The idea of manipulation extends beyond Kiyosaki's claims. Samson Mow, CEO of John3 and a prominent Bitcoin advocate, has pointed out that Bitcoin's recent price action appears unnatural. He noted that despite record-breaking institutional inflows and aggressive accumulation by firms like MicroStrategy, the price remains range-bound. If Bitcoin's price isn't moving despite institutions and retail buyers accumulating BTC, then someone must be selling, Mao stated, highlighting how even with consistent buying pressure, Bitcoin has struggled to break out of its narrow trading range. This observation has led him to believe that Bitcoin's price movement looks very manufactured and doesn't look natural at all. Historically, market suppression tactics have been used in commodities like gold, where large financial entities strategically control price movements to maintain dominance. If Bitcoin is undergoing similar treatment, it could explain the stagnation despite increasing demand. Mo's theory aligns with Kiyosaki's concerns. Both suggest that major financial institutions are influencing Bitcoin's price to accumulate larger positions without triggering a price breakout. With companies and hedge funds buying more Bitcoin than what is mined daily, it's hard to ignore the question: if demand is outpacing supply, why isn't the price skyrocketing? Whether intentional suppression is happening or not, the behavior of financial giants like BlackRock and the seemingly coordinated sideways trading pattern of Bitcoin raise valid concerns. If Bitcoin were to break free from these artificial constraints, it could experience an explosive price movement. The uncertainty remains. Are we witnessing a normal consolidation phase, or is Bitcoin being strategically held down until the right players have secured their positions? We've explored the idea of Bitcoin price suppression, whether it's a natural result of market behavior or an intentional strategy by powerful players. We know that institutions have been slow to adopt Bitcoin, despite the overwhelming data showing that it improves portfolio returns. We also know that the U.S. financial system is in dire straits, which raises the question: are those in power positioning themselves before Bitcoin's next major move? James Lavish put it best when discussing the slow adoption of Bitcoin among institutional investors.
It's taking a long time to get around that conversation up to the top of the list to become an allocation. At this point, it's still only been a risk asset. It's something to go out on the risk curve. It's something that's different that could enhance your portfolio. They have seen some of these things, but they believe that it's because it's a risk asset and they're taking risk by adding it to the portfolio rather than understanding that they're actually adjusting their overall adjusted return down over a long period of time. And it takes a minute to get there, and they're not there yet.
So what do you think? is Bitcoin's price being artificially suppressed to benefit institutions and governments? Or is this just normal market behavior as adoption grows? Let us know in the comments.